Quick market update today, and this one matters whether you're a homeowner, a landlord, or you're trying to buy a property. According to reporting in The Guardian and the Financial Times this August, the Treasury is modelling a big overhaul of property tax in the UK. So we're talking about stamp duty potentially being scrapped on main homes, and even a version of capital gains tax being applied to the very high value properties. I'll break down what's actually on the table, who could be affected. I'll come back to a simple strategy that I still think works for property investment, whatever happens. So as of right now, August 2025, nothing has changed in law. I want to stress that. But these are options being tested on paper inside the Treasury. One version being explored, reported in The Guardian, would stop buyers from paying stamp duty up front and instead charge sellers when they sell a home worth over about £500,000. Instead of paying up front, think of it as a running tab that's settled at sale. So it's not an annual bill dropping on your doormat like some states in America. It's more when you're looking to sell a property worth over £500,000. The seller then pays tax. But if you own a property where you've already paid stamp duty to buy the property, the Onward think tank model being discussed says that you won't be double charged. It would only be for people who bought a property since that rule would have been introduced, if it gets introduced. Again, this is modelling, not policy. But separately, The Times has reported that officials are also looking at applying capital gains tax to very high value main homes. Numbers like 1.5 million plus have been mentioned, which is alright for the people who can afford homes that are £1.5 million plus, but it is a big change and one that I definitely think is worth discussing. So right now, if you own your main residence, it's fully exempt under what's called private residence relief. But instead, for people above the value threshold, so 1.5 million, they would pay capital gains tax on the sale of that property, which is pretty huge when you think about it. So if someone was just upsizing their home because they needed more space, and maybe they lived in London where 1.5 million properties are around every corner, then they would potentially have to be paying a lot of tax on any of the profit from their property price increasing. So if this ever came in, it would be a major change. But a quick background from me so you know where I'm coming from. I'm a property investor myself. I buy, renovate and let out properties. I spent more than 7 years working on loans and mortgages at Tier 1 investment bank. So I have actually seen firsthand how policy shifts through lending and housing markets, both on paper and in practice. But a big question that I thought worth raising is, why is this even being looked at? So economists and think tanks, like Onward, have argued for years that stamp duty discourages moving in the UK. The bigger the home you buy, the bigger the upfront tax bill. So many people just simply stay put rather than trading up, because who wants to pay a load of money just to move property? And also, somewhat controversially, council tax is still based on values from the early 90s. So think of two properties that are the exact same but in two different areas. One area has shot up in value since the 90s and one area hasn't. They would still both be paying the same tax band because they were valued at the same in the 90s. And people are guessing that the reason the government haven't changed it so far is because lots of people would win, but lots of people would lose. And these people who have lost would obviously be incredibly upset and would call it unfair. But if a proportional system was introduced based on today's values, it could raise money more predictably. But whether that's fair or even politically possible is another question. So if you're in London, yes, your eyebrows can definitely still stay raised. So who might this news matter to? Well, let me give you a quick snapshot. It might matter to first-time buyers who already get a stamp duty discount today, but scrapping it altogether could still help those stretching into the slightly higher priced homes above the current threshold. So if you were purchasing your first home above the stamp duty land taxed first time buyer discount scheme threshold, then they would still be able to get a better discount because you wouldn't be paying stamp duty land tax up front, it would only be on the sale. So those first time buyers in that situation would find it beneficial. But this news also affects the longer term homeowners in higher value areas like London. A seller paid levy could mean a far bigger bill when you eventually sell. And also this news would affect the landlords investors like myself. Most of these rules are aimed at main homes, but as Bloomberg has pointed out, overall market confidence would affect the whole chain. So it would eventually ripple down to people like me. And then finally this news would affect the owners of very high value homes. So the capital gains tax chatter, which was reported in the Times, that's the one to watch if you're in that position. Now, before anyone panics about this news, there is absolutely no need. As of now, August 2025, these are just modelling exercises, so not law. If anything formal does come up, it has to go through a consultation and a budget first. Nothing changes for you today, and if you just bought a home, you don't suddenly owe anything extra. But if you're planning on a sale, just keep an eye on the autumn budget announcements, and don't make life decisions based on rumours. Remember the so-called mansion tax, which was floated in 2015? It made loads of headlines, but nothing ever actually happened. And this could end up in the same category. So what do I do about seeing news like this? Well, honestly, my approach is the same as ever. I just stick to my fundamentals. So I buy properties that cash flow at today's mortgage rates in solid areas with tenant demand, and I have a clear exit strategy. So that way I'm insulating myself whether tax policy does tweak, rates do shift, or nothing changes at all. But a final reminder, I'm not an accountant and this isn't financial advice. And these proposals may never even leave the Treasury spreadsheets. And if you're thinking about investing in this kind of market, watch my video over here on how I'd start property investing with just £50,000 in 2025. Thank you for watching, and I'll catch you in the next one.